Okay, guys, welcome to another weekly market review session today. I've got some interesting stuff to share with you guys. I want to share with you guys how the month of April went and how we are looking during or at the start of this May for ourselves. Okay, so let's just get straight into it. Okay, again, this is not financial advice. Any views, opinions, references, or assertions we may set out on our social media or otherwise it's just our own personal views and not the views held by any other group. Okay, so with that, let's take a look at the charts and check out how it is. All right, so we are on the chart. This is the S&P 500. Now, before I go into the charts, I just want to talk a little bit about how the month of April has gone for all of us. So very simply, if we go and see the seasonality, right? So seasonality of the SPY, the S&P 500, over the last 20 years, you can see that usually the month of April is a bullish month, right? Compared to the rest of the year, over the last 20 years, the month of April tends to be a more bullish month for the S&P 500. And even if we check the seasonal chart over here, you can see very clearly that the month of April, okay, if we zoom in a little bit more, sorry. Right, so you can see, if we zoom in a little bit more, the month of April tends to be a more bullish month. Okay, we rarely quite hard from the start of April all the way to the end of April. But if you guys have been trading, you will have noticed that that isn't the case for the month of April. So why do I say that? Well, very simply, if you can see, for the last month of April, okay, ever since the start of April, which is from here onwards, you can see that the S&P 500 did go up, but it's sort of been sideways, right? We've sort of been sideways for ourselves. Even though we did rarely, we've just been in this range over here for ourselves, right? So if I just put it very quickly, we sort of been in this range for ourselves, right? We did go up, we hit a bit of a resistance here, and then we came back down, okay? And it wasn't as smooth as the previous rallies that we've seen. So if you want some context, guys, just go ahead and, if you want some context, just go ahead and see how it was, for the month of March for yourself. Okay, so for the month of March, you can see when it rallied over here, it is much more steeper in terms of its uptrend, okay, compared to when it rallied for the month of April, right? A lot more smoother for itself, but more or less going sideways, okay? We took a major dip first, we went up, we came back down, we went lower than expected, and then now we are pushing back up as of yesterday, which is the first day of May, okay? So really, April didn't go the way that it usually goes. And again, this is not like any other year because this year is a little bit different. There are a lot of companies, your big tech companies that are laying off, individuals for themselves. They are laying off employees. You have a lot of companies going through cost-cutting measures. You have banks announcing their default, banks not being able or being bailed out as well. So, you really have mixed signals. The Federal Reserve still increasing interest rates. Really odd times that we are in right now for ourselves. So April didn't go as expected. So what can we expect for the month of May? So usually, you may have heard there's a saying in May, sell in May and go away, right? A lot of investors or traders always say this, sell in May and go away. When I first got started, that's what I used to hear as well. And very simply, why do they say this? If you look at the seasonality for the S&P 500, May tends to be a bit of a bearish month, right? You can see that S&P generally drops. Okay, it drops during the first couple of weeks. And during the last week or last 1.5 weeks, it does end up rallying significantly for itself. Okay, so you can see this rally that happens significantly over here. Okay, and if we check my other seasonality, you can see that over the last 20 years, compared to April, May is a more bearish month for us, right? It's usually a more bearish month. But this is the thing, guys, it's very weird. April already didn't rally that much. It was more sideways. So for the month of May, since this is not like any other year, I'm not really expecting it to actually follow as what it has done according to seasonality. So what am I expecting for the month of May? I think for the month of May, we can expect a rally. All right, we can expect the S&P 500 to push up some more. Where can it push up to? I'll show you in a bit. But I think for the first 2 or maybe 3 weeks for ourselves, we might see the S&P 500 push up. And then during the last week of May, we might see it go sideways or even down a little bit for itself. Okay, so let me explain to you why I feel this is the case. So very simply, on our S&P 500 chart, you can see right now that number one, why am I more bullish? We are in a very nice uptrend for ourselves. Okay, so how can I classify that we are in an uptrend? Well, if I go on my daily chart and I draw it out for you, I think it becomes very, very clear. Okay, number one. Okay, we start from the bottom, that's all the way here. So we push up all the way. Then we drop down for ourselves. We push up even higher. We drop down for ourselves. And now we are pushing up for ourselves. So if you look very carefully, guys, you can see that we are making for ourselves higher lows, okay, and higher highs, all right? And now, potentially, we could make a higher high for ourselves. Okay, so we are still in a very nice, steady uptrend ever since October for ourselves. Okay, so we're still in this nice uptrend for ourselves. And that is why, number one, I feel a bit more bullish on the markets. I'm still thinking we have room to go up before we go a little bit sideways or even have a little bit of a pullback for us. Okay, now, the next thing is, right now, another factor that makes me think we might be more bullish is that we are at a critical resistance point. So if I draw my line over here, just draw a horizontal line, okay? So you can see it in yellow. I'll just make it a bit thicker. Okay. So you can see over here, right now, S&P 500 is at a critical resistance. So why do I say this? From the start of last year, which is around March, you can see over here, the price came down, it tested this as a support and it went under. But what happened eventually is that it tried to test it again. Then in September or around September for ourselves, August to September, we saw it test and break. But this was a bull trap, guys. Okay, it was a bull trap. Why do I say it's a bull trap? It tested it, it broke out. But when it came back for a retest, it basically gapped down. Okay, so it gapped down. You can see over here, there's a gap. It went down. It didn't even test. It went below it. And prices shot back down for itself. Okay, and not only that, but in the month of February, you can see that we tested this level again. Okay, so typically, what happens to a support or resistance level when it gets tested more and more? It becomes weaker. All right, so the more a support or resistance is tested, it becomes weaker and weaker for itself. And eventually, what happens is that it ends up breaking and shooting above or below for itself. So we have been testing this level many times for ourselves. Okay, you can see we have tested it in June, tested it in August, tested it in February this year, And now we are testing again for the end of April and the start of March. Okay. So if we can break this level, then we do have movement that can continue upwards for ourselves. Okay. We do have movement that can continue upwards. So number one, like I told you, we are still on an uptrend, higher lows and higher highs for ourselves. Number two, we are testing a critical resistance level. Okay. Tested multiple times, and this time, if it does break, we will rally further from here. The third thing that makes me bullish as well is that if I draw my Fibonacci, okay, so let's take out my Fibonacci and I draw for myself. So I draw from here. Oops. Okay, so my Fibonacci, so I draw from the bottom here to the top here. And I pull down to here. Okay, if I draw my Fibonacci, guys, you can see very clearly, maybe I go, right? You can see very clearly that right now, again, on the Fib, we are testing the resistance that I talked about, and we do have room to go up for ourselves if we break it. Okay, so if we break it, where can we go? You can see we can go up to my number one level, which is around 424 to 425. Okay, so it's about a $10 play that the S&P 500 can still continue to rise for itself if it breaks the resistance level for ourselves, right? So about a $10 move up for itself. That's what the S&P 500 can do. Okay. Now, of course, the markets are not going to rally every day for ourselves. It's not going to continuously go up. We will still have choppy days. We will still have healthy pullbacks. Okay. Stocks don't go up in one line. They go up in a wave pattern. Okay. That is why you could see the higher highs and higher lows just now. It goes up in a wave pattern. And that's how it generally moves up. That is a healthy move up. So if it does break our resistance level, we do have a $10 move up to around 424 to 425 for ourselves. Okay. Now, the last thing that makes me still bullish on the markets is if I turn on my EMAs, right? So EMAs for myself, you can see my red is my 50, my green is my 100, and my 200, okay, for myself is in purple. Let's change this. Okay, you can see when the markets were in an uptrend, they very nicely formed this for themselves, all right? The red, my 50 EMA was on top. My green was below that. And lastly, my 200, which is the purple. This is what happens when a stock or the SPY is in a very nice uptrend for itself. This arrangement you can see over here. Okay, 50 on top, 100 in the middle, and 200 below. And what has happened now for ourselves, you can see my S&P 500, okay, is still showing us this same arrangement, right? We have the 50 now on top, my 100 and my 200, okay? Now, if I use the US 500, now what is the difference, guys, with this? The US 500 very simply includes the futures, okay? The futures, you can see that the charts are showing us the same thing as well, right? My 50 is on top, my 100 and my 200. And if you look at when it was an uptrend, guys, you can see very, very clearly for yourself. Okay, my 50 is above 100 and 200. Okay, so that's my third factor, guys, that my EMAs are showing me that it is in a full uptrend for itself. And I still feel more confident that it will be bullish in the markets. Okay, now, of course, guys, like I mentioned, don't expect the markets to rally up every day. That's not going to happen. If it does pull back, the maximum I can see it pulling back to is around 400. Okay, so let me find my 400 level. Okay, so around 400 for ourselves. That's where I feel the maximum the stocks and the charts will pull back to. But don't be expecting the markets to pull back below for itself. Okay, I think 400 is a very nice level for it to pull back. Psychologically, it's a round number as well. So that's where I see the markets pulling back if it does pull back. But from there, we have further upside to, like I mentioned, about 424 to 425. Okay. And lastly, the short term, as long as prices remain above my 50 MA level for itself, it will continue to rally up for itself. Okay. So as long as prices remain above my 50 EMA, in the very, very short term, prices will continue to rally up for itself. Okay. So I'm more bullish on the markets. I feel like for the first part of May, first 2 or maybe 3 weeks, the markets might go up. I won't expect it to go up every day. But then the last week of May, maybe there might be a pullback or things might go sideways. Again, this is not like any other usual year. So I feel like it might not be like the usual sell in May and go away. Okay, so that is for the markets and how it is looking in terms of our S&P 500 and where we can go from here. Now, with that being said, the first week of the month is usually a harder week to trade. So there's a lot of data that's coming out, guys, a lot of high impact news and events. So number one, on Monday, which was yesterday, we have manufacturing PMI that came out. Number two, today we have jobs opening that's coming out at 10 p.m. For Wednesday, we have non-farm employment change and another services PMI. Thursday, early in the morning, this is the most important one, guys. I believe everybody's going to be looking out for this. It is your interest rate hikes. Okay, your interest rate hike. And again, everybody's anticipating the interest rate hike. What is Jerome Powell going to say? Is he going to keep on hiking interest rates? Is he going to cap it? And is he going to say anything else? Everybody's going to be watching this for themselves. Okay, so the federal interest rate, that's what everybody is going to be having their eyes on. And this could possibly shake up the markets and move it a certain direction. Okay, we've got unemployment claims as well. And lastly, Friday, we have non-farm employment change and unemployment rate. Okay, and also hourly earnings, basically how much individuals are earning. Has it been increasing according to inflation? So this week, we are filled with high impact news. Generally, the first month, I would like to take it a little bit more easier because there's all these high impact news. These things are coming out. So just be careful when you're trading the first week of May. And then for the rest of May, it should be a lot more better. There's not as much critical events to look out for. Okay, so that's it on how the month of May should go, how the charts are going, and what we can look out for ourselves. Okay, now lastly as well, I just want to see when I show you guys when I turn on my MACD. Okay, so lastly, I just want to show you when I turn on my MACD, you can see in our uptrend, every time my blue line has crossed, we have had a nice uptrend for ourselves. Every time my blue line crosses, we have a nice uptrend for ourselves. Every time it crosses, nice uptrend. And right now, you can see my blue line as of yesterday is trying to cross again for itself. So if it does, then we will have a further, or it looks like a further continuation on this rally for ourselves. Okay, so again, more bullish on the markets, but around the third week to the last week of May, I would expect it to have some bearishness or go sideways for ourselves. Okay, so with that, that's how the charts are looking. And right now, I want to share with you some other things as well. All right, everybody. So with that being said, with the markets being volatile for the month of April, if you know exactly the right knowledge you need to have, and you know how to apply that knowledge with the right guidance, you can make some serious, consistent returns for yourself, everybody. And this is encapsulated by the fact of our students here in the TWC community. Okay, so because they know how to take advantage of different market scenarios and opportunities, they are able to make consistent returns and serious, guys. The word I want to emphasize is serious, consistent returns for themselves. So you can look at Prash over here, making 1.3K USD in a span of 2 hours. Okay, how many of you would like that? To make 1.3K USD in a span of 2 hours, just sitting down in front of your computer. How amazing is that, everybody? Right? It's fantastic. Okay, so for him, loves to trade Tesla. He knows what are the signs and the indicators he should look out for. He has taken advantage of it and he has made some good returns for himself. But it's not just him. We've got other guys as well. We've got Raj, we've got Yuda, we've got Desmond, we've got Swetang. All of them, whether you're having a big portfolio or small portfolio for yourself, easily making anywhere from $100 to $300 for themselves in one night for them. Okay, for one night for their portfolios. Okay, so it's fantastic. Great returns from these guys. Now, it doesn't stop there. Okay, it's not just them. We have so many others that are doing this. You can see Martin over here, smaller portfolio, making 26%. You have Keith, one of our latest members who has just been absolutely killing it in the markets. Okay, Meta announced their earnings. He did a lotto play. So lotto is a lottery play. He used capital he could afford to lose, but it went in his direction. And look at this, guys. Just one night in this trade, he has already made about 4.7, close to 5K USD for himself. Okay, how many of you would like that? You literally earn your 1 month's salary, all right? Your 1 month's salary in just one night for yourself. That's incredible. No other place can do this for yourself except the stock markets. Okay, except the options and stocks markets. This is the only place where you can sit in front of your computer and literally make 5K overnight for yourself. And he has already told me he has gone on to make double digit and is aiming for triple digit returns for himself right now in the coming months. All right. So he's already made, looking for 5-figure returns, looking for 6-figure returns now for himself. Okay, fantastic guy. Keep really killing it in the markets. Okay, and his other place he did for himself, smaller amounts of money, good amount of capital is taken for himself. And Desmond again killing it, day trade, literally 20 minutes, making about $800 for himself. And lastly, we got Prash again. Prash is someone that really loves Tesla and he loves trading on it. He realized he is able to spot the patterns and the sequence and the setups for Tesla. And because of that, he consistently goes in on the trades and he makes very consistent returns for himself. Okay, one night, making 1.7, making 1.2. Fantastic by Prash. And lastly, Desmond again, smaller amount of money, smaller returns, but he's been doing it consistently for himself. So if you want to know how you can do this for yourself, take that first step, everybody, and join our free Discord channel. Okay, so number one, I have a free Discord channel that's over here. The link is bit.ly/IWC Discord and the QR code is over here. Now, the QR code is over here, so please scan with your phone, or if you want, you can just type in the link over in your browser, bit.ly/IWC Discord to access the Discord channel. This is where I post a lot of weekly market review videos and any other videos that are interesting in the markets or I need to update you guys. I will post it down there as well. Secondly, for ourselves, we have our Instagram page, and I want you guys to also go ahead and follow that. Why is this important? So number one, the link for it is bit.ly/IWC Insta, and the QR code is over here as well. Just take out your phone and scan it for yourself. Now, why is this important? Because on our Instagram page, we actually post this thing called Spotlight of the Week. And Spotlight of the Week very simply means that certain stocks that we have identified key levels on, we have actually posted them and posted the technicals for them on our Instagram page. So if you already have a sensing of certainty and you know the direction of where a stock is going to, you can use this spotlight of the week as another trading resource to help you in your trading journey for yourself. So we have some students that have actually followed the spotlight of the week with their own prerequisite knowledge, and they have made some returns for themselves. So go ahead and check it out. This is all on our Instagram page, bit.ly/IWCinsta, and scan the QR code for yourself. Okay, so with that, guys, I come to the end of my video. This is how this week's video has gone. So with that, trade safe, stay safe, guys, and may the markets be in your favor.